traders. It's 11:20 on 2/17/2012, and I'm just gonna open up the YM here real quick and show a couple levels I have marked. If you can see this bowl shape pattern we're building. Let's look here at the 930. Okay, here's what happens often. Guys go both directions at 930 at the open. They physically load up long and they'll load up short. And what they do is play it both directions. This happens often. You'll see a drop through the morning, or you'll see a rise through the morning into a lunchtime area, and then price comes all the way back up very close to 930, so they can close out the total opposite position. So they make money going the one direction, and then they close out a position the other way. So that's something to think about. This was our 930 right in here, and this area right in here. It's since I'm on full screen here, I can zoom in here. This is an area right here. See that's untested. Doesn't mean price is going to come right up to there, but it is an untested area. Let's look for a few other untested areas. Here's one right here. I mean, we already hit that. Let's look. So when this occurred right here, there's a good chance that price was going to come back right up to that spot. So let's if this is a recent high here. If you felt like we were looking for an ABC pullback, this itself is a shakeout move. If you're thinking ABC, this last drop down is a shakeout move. So what we may be seeing is a move back up into this area, and then we may be seeing a move back up into this area, and then another move down below this current low here to give us an A, B, C pattern. Alright guys, we're at the end of the trading day here, and you can see we did form a very nice little bowl. And I'm going to mark, I can't fit this whole chart on the screen here. I'd have to go to a different chart, but different tick chart. But this is about the area I thought we were going to go to, because we had an untested area right in there. And of course that was the 930. Exactly, the highs were at 930 here. We did form a bowl. We did not get the lower low that we were looking for down here, which is what I had marked here at the 12.881. But we did go back and take out the 930. So even those guys, whatever positions they put on at 930, they were taken back out with a new higher high. So that's the higher high is what amazed me there a little bit. Kind of expected maybe to just go back right into here somewhere, and that would be it, but surprised we got the higher high. We are here at the end of the day, and what I've done from here is mark these trades here. This is the beginning. Here's our 930 trade. So I'm going to zoom in here and we'll go over why each trade was an entry and why they weren't. Alright, on this downtrend, happening fairly quick here. 931 here, 933. 35, 36, 37. Plenty of time to see this divergence happening. Plenty of time to notice that we're now, the purple RSI is down in here. The darkest hour on the move is a great time to get in. When it looks very bad, which that was after that move down. But we're starting to see value generate here. So let's zoom in here real quick. This blue bar right here could have been a signal to go long. We were already having some divergence go on. We just had some minor takeout, instantaneous shakeout here. Okay. But across here, each one of these is, the RSI is a higher high. We have lower prices, so we have divergence there. Any one of these blues could have been considered an entry. This one because it came back into the 10s, and this second one. Alright, didn't take a trade here. You could have, if you were assuming higher highs, like pullback bounce. That could have easily been an area there you wanted to take a trade. It would have been, I'm going to mark it, just didn't have it marked before. It wouldn't have been a losing trade. You would have gotten some points here, and then you should be able to move your stop up in the meantime to at least break even. Same here. This is a little pullback to 10s, and we get a blue bar here. We got a couple ticks that went backwards on you, but we got to move up. So at that point, it shouldn't have been. This should not have been a stop out trade. It should have been a money making trade for you. This one as well. You're in the trade. No stop out before you get a decent number of points, about 8 points from we have one little bar. Of course, I'm not sure when I'm making videos exactly how much in clarity I need to provide here, but here's your entry right here. 10s, divergence, blue bar. You shouldn't have to watch too many outside factors when you're viewing our webinars. Alright, so here's some divergence here as well. Even this blue bar right in here could have been an entry. Right there, that one. And this is one we have marked, but this certainly could be one too. They're only a couple ticks apart in price. Don't have anything marked here because there wasn't enough of a pullback. Would you felt good about taking that? No. Not this one. Of course, you should have been able to make break even on that if you took it, but it's a little premature for this move up to take something there. Maybe this one would have felt completely normal to take one, so it didn't break this. But so it didn't break that support, but that's of course the YM, right? Just when you think support is going to hold, it finds a way. So here we go. As soon as that bar shows up here, we've got purple RSI, a break back into here. No divergence though. That's the thing that's hard to spot there. No divergence on that trade. If you felt this was a pullback and possibly higher highs, you could easily see where that would be considered a trade. You're ignoring the purple RSI and you're going with just the green RSI, and then as soon as you start to get color confirmation here, that's the trade. And let's keep going. This could have been a signal, this blue bar here or this bar here. Okay, you also have a new lower low with more color value areas here, and you've got divergence here, so that itself is a signal. This is a pullback trade, perfect pullback trade. You've got the green RSI crossing the 10. You ignored everything. When you got a yellow, you started getting a heads up, you start looking, and you get a blue bar that was on the bottom side of the Keltner channel. So that's a nice trade, very low risk trade. Here's another one as well. Here's a trade you could have taken on a pullback. Just want everybody to see that just because this green is crossing the 10 doesn't mean it's painting a blue bar. I try to explain this every once in a while in some of our videos, but don't get confused that just because these blue and yellow bars are happening at a crossover of the 10 that it's painting a blue bar. And that these indicators that are all combined up here for volatility and the different indicators we have built into just these paint bars to show you where value is being built doesn't coincide with crossovers. It just, that's the point of this indicator. Combining these two, you use these to your advantage when you can combine the two. So let's look here for examples. These blue bars right here are not a crossover. Let's see, you've got all these blue bars here. All these blue bars here had nothing to do with crossing over a 10. Okay. These blue bars painting right here and the yellow have nothing to do with a crossover into the 10. So these are totally different technical calculations for value than this. And when you can use both this and these and put them together and use the Keltner channels, which are set up at the same time for this, and use the Keltner channel, you get, Swire signals work the way they do. Alright. Don't necessarily think this is the best signal per our rules. There's just divergence showing right in here, and we're getting a value area. Same with this, but in my book, considering this run up, I would expect a little more drawn out. I'd be safer taking a trade out in here, like up, down into here, more of an ABC pattern. So this isn't necessarily a trade that I would consider taking. I would have expected this, but we had a very strong market. Let's go back here. Another thing, real nice, we're watching this downtrend. We're watching this all take place in real time. And this area here is the first area that we see some divergence between this spot, and this spot. Divergence. So I've got this one blue bar because we got some value building up in here. Got this one blue bar circled, and we happen to go a little bit against you. We have a little more divergence, so if you could spot that divergence while price is going down and you see more value building, you got a yellow and two more blue bars, that could have been, if you hadn't been stopped out yet, you could have easily put an add on right here, put another contract on right here. Alright, so here we go on another one. Let's see, is this a lower low? No, this is a triple bottom right here, which doesn't happen too often, but we'll see when we got a lower low. And there's no divergence here, but we are outside the Keltner channel, and we have two of our rules down here met, and we have color rules met. So there's a blue bar there. You might have taken that, but you could have also taken that. Felt a little more confident on that. And that's it for the end of the day. So let's zoom way out here. It's hard to see these trades right here, but I'm going to shrink this way down so we can see these a little better. Okay, so 9:30 in the morning, you had this trade here. That one probably could have stopped you out, but this was a good entry here. This was good. This was good for money. This was good. And this was good. We should have at least been able to break even on that amount of, it was about six points there, ticks. That one would have been a stop out, possibly, depending on how much risk you're willing to put on. And this would have been good. This would have probably stopped out as well. This you should not have stopped out on. This is a good one. This is a good one. Good. Both of those. There's not enough information in there not enough movement in there to stop you out, you know, realistically. So this could have been a moneymaker in this one. So we have some good percentages there. I'm gonna say 1, 2, 3, 4, 5, 6. 7, 8, 9, 10, 11, 12, 13, 14, and I think about four bad trades, 14 and 4. But a couple of them, like this one here, you know, might not have stopped you out. So we're picking the value areas, even in a down market, all morning from 9:30 a.m. to 11:14. All right, thank you.